If the people controlling interest rates don't know what to do next, that's not just their problem, it becomes yours. Because right now they are facing a situation where every decision has a cost, and whichever path they choose, it affects your loans, your investment, and your future money. So the real question is, why are they suddenly stuck? They are not confused, they are constrained. Because what's happening right now is a result of multiple pressures building at the same time. And by the end of this video, I'll make you understand why rising inflation and slowing growth create a policy trap, the two choices central banks have right now, and why both are difficult, and the exact moment where their decision starts affecting you directly. Once you see this clearly, you will understand why this situation has no easy outcome. But first, you need to understand how interest rate decisions normally work. In a normal situation, central banks have a simple playbook. If inflation is high, increase the interest rate. If the growth is slowing, reduce the interest rate. Now, this helps in stabilizing the economy. But right now, both problems are happening together. Inflation is rising again because of energy and supply pressures, and at the same time, growth is slowing down because higher costs are reducing the spending and investment. And this is where the system breaks down. Now, central banks are facing two choices. First, to fight inflation, that is to raise the interest rate, but this will slow the economy further. Second, to support the growth, that is to reduce the rates, but this will increase the inflation pressure. So, no matter what they choose, they worsen the other side. And this is why the situation is called as a policy trap. Now, connect this to everything we have discussed: supply disruption, rising oil prices, inflation pressure, economic slowdown. All of these forces are now converging into one decision point, and that decision cannot satisfy both the sides. So, if rates stay high, loans become expensive, growth slows, markets face pressure. If rates are reduced, inflation can rise again, purchasing power falls. Either way, you feel the impact. Now, go back to the question you asked. Why are they stuck? Because this is not a normal cycle anymore. This is a situation where the usual tools create new problems. So, no matter what decision they take right now, whether they focus on inflation or growth, there is no outcome where everything improves at the same time. Exactly. That's the reality. And when there is no perfect solution, every decision becomes a trade off.